My appraisal came in higher than the purchase price. What does that mean? We're going to talk about that next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And today's topic, as I led into, what if the appraisal came in higher than the purchase price? You might think I'm crazy that, oh my gosh, why on earth would that possibly happen? But in a market that is appreciating, and again, we've been in an appreciating market since roughly 2019, really into 2020, we've seen prices continue to go higher, especially in a hot seller's market like we're in right now, where we have multiple offers. Prices are moving up, so you very well could see this happen. Now, I'm going to take you on the screen and we're going to run through the exact math of what to do. I'm going to provide you my top 3 tips on how to get this done to make the financial burden of this property less on a monthly basis and less cash to close. All right, let's jump onto the screen. Okay, let's jump on the screen as mentioned before. And here's our specific scenario. We have a $400,000 purchase. This borrower is putting 3% down, so that's $12,000 of down payment. We're going to estimate closing costs on just a flat $5,000. That gives us a $17,000 cash to close. You can see the loan amount. You can see cash to close under that sum number. And at a general interest rate of just 7%, that would put the principal and interest at $2,263. So as mentioned, what would happen if that appraisal came in higher? So now I'm going to give you the example of what I was able to do with a borrower just in the month of May 2024. And we had an appraisal come in at $412,000 on this same $400,000 purchase. Again, we're in an appreciating market. An out-of-town agent priced the home and probably didn't know there was more kind of meat left on the bone here. And in this case, $412,000 came in on the purchase price, or excuse me, on the appraisal. I went and spoke to the attorneys. In Illinois, we have attorneys that negotiate the contracts and do the negotiations. In your state, that potentially could be the real estate agents. But here is the math. We negotiated the purchase price up to $412,000. Do you think this is a good idea? Put your comments below. I'm going to keep going on the math here, but I'd love to hear from you. Now, that means if we put that same 3% down, we are moving our loan amount up. So now our down payment is $12,360. Our closing costs, instead of $5,000, now we're $7,000, because what we're doing is we're taking some of the seller credit. We're going to negotiate that $12,000 seller credit in because we upped the purchase price to $412,000. Now the seller is going to net the same $400,000, but now we have a $12,000 subtraction off of our cash to close. So we're going to net $7,360 instead of $17,000. So we're bringing in roughly $10,000 less money. We bought down the interest rate by 0.5%. In this case, we're going to save roughly $100 per month. We're going to bring in $10,000 less cash to close, right? So again, the summary here is if you're looking at the screen, you can up your purchase price, get a seller credit to offset it, right? And in this case, your principal and interest would go up, but if you use some of that money to buy down the interest rate on the entire loan, then you're going to get a significantly lower payment. And in this case, we saved $100 a month. Now, make sure and keep tuning in here. We're going to talk about the top 3 tips on how to actually make this happen. One is you have to work with a lender that has local appraisers. If you're working with your local bank, and let's say that's a national bank, this probably isn't ever going to come up. Typically, they are quite conservative. When you work with lenders that have local appraisal companies and appraisal panels and appraisers in the local market, they're going to be able to see, hey, this was in the right school district. There is definitely more value than what the actual purchase was, even though this is a hot market. And again, this is May of 2024 when prices are still going up. The list to sale price is over 100%, meaning they're going for over asking price. The average home is having multiple offers on it. This is still possible. This might sound crazy to you, but it's still possible if you have the right team around you. Then when you go to negotiate, you ask, and this would be tip number 2, you ask to waive the appraisal. There's usually an appraisal contingency. Well, why would you do that? You already have the appraisal back. They might not know that yet, but you have the appraisal back. So you're not concerned on what the value is going to be. The seller shouldn't be concerned unless, and I'm going to give you this little unless in just a second, unless they're an investor. If they're an investor and they're selling the property, they're going to care. And again, I'll talk about that in just a moment. If they're an owner occupied or they're selling a second home, they should not care. They're going to net the same. The real estate agent typically is getting paid a commission on the net, not the gross. So in this case, 412 minus $12,000 is 400. They're still getting the same commission. So the seller, again, is paying the same commission line items as a whole. So roughly the same kind of fee structure. Now, again, in the buyer's perspective here, they're walking away with a ton more. And then my third tip is to sweeten the deal. If it's 412 and you ask for an $11,000 credit, the seller is going to walk with 401 instead of 400. So therefore, you sweeten the pot by extra $1,000 in them doing so if you need to. I would suggest starting with the exact dollar for dollar kind of even equation, which is what we did and what we got approved for this borrower. But with that said, you can always sweeten the pot a little bit to be able to get this done. All right, let's wrap up. So if the appraisal comes in higher, now we've got some tips on how to make this work, right? Make sure and put your comments below. If you have questions, if you have comments, you think this is a good idea, have you seen this come up before? Again, people may call me crazy that this, going above, but it does happen. And especially when you have a local lender that you're working with, then you're going in and asking for that seller credit and potentially sweetening the pot, right? And waiving that appraisal contingency. That should help you get the job done. If you have an appraisal coming higher, reduce your cash to close, reduce that interest rate. You're permanently buying it down for the rest of the loan and kind of use those funds. Now, here's a little tip. You cannot get a credit for more than your down payment and closing costs. I'll say it again, you cannot get a credit for more than your down payment and closing costs. And then the last tidbit, which I left you hanging for, just in case if you're buying from an investor, they're going to be looking at a capital gain. They bought the property for $300, they sell it for $400, then they have a $100,000 capital gain they're paying taxes on. If they sell it for $412, they're paying a capital gain on $112,000 instead of just $100. They're likely not going to want to do that, and that is typically why, in the rare occasion when you're buying from an investor, it may not work. Hey, again, my name is Ryan Skaggs, the Mortgage Man. If you haven't, click that subscribe button, click that like button, click that bell icon to be notified, putting out weekly videos on the channel. Stay safe, and we'll see each other again very, very soon.